Money wisdom. Make, multiple, and manage your money quietly. Money wisdom. Make, multiple, and manage your money quietly suggests a strategic approach to personal finance that emphasizes discreet but effective actions to build wealth. Here's a breakdown of each aspect. Making money involves various methods and strategies depending on your skills, resources, and circumstances. Here are some common ways people make money. Employment. Getting a job is the most traditional way to make money. You exchange your time and skills for a paycheck from an employer. This could be in various fields such as healthcare, technology, finance, retail, etc. Entrepreneurship. Starting your own business allows you to generate income on your own terms. This could involve launching a startup, freelancing, consulting, or running a small business. Entrepreneurship often requires creativity, risk-taking, and resilience. Investing. Investing in financial markets such as stocks, bonds, mutual funds, or real estate can generate passive income and wealth over time. This involves putting your money into assets that have the potential to grow in value, but provide regular returns. Side hustles. Many people pursue side hustles or part-time gigs to supplement their primary income. This could include activities like driving for a rideshare service, delivering food, tutoring, or selling handmade goods online. Online opportunities. The internet offers numerous opportunities to make money online, such as freelance writing, graphic design, programming, digital marketing, e-commerce, and more. You can leverage your skills and expertise to offer services or sell products to a global audience. Passive income. Passive income streams involve earning money with minimal ongoing effort. This could include rental income from properties, dividends from stocks, royalties from creative works, or affiliate marketing income from online platforms. Education and skills development. Investing in education and skill development can increase your earning potential over the long term. This could involve obtaining higher degrees, attending workshops or training programs, or acquiring certifications in your field of interest. Network marketing or multi-level marketing. MLM. Some people participate in network marketing or MLM programs, where they earn money by selling products or recruiting others to join the program. However, it's essential to research these opportunities thoroughly and be cautious of potential scams. Ultimately, making money requires a combination of hard work, determination, and financial literacy. It's essential to choose methods that align with your interests, strengths, and goals while also considering factors such as risk tolerance and market conditions. Multiplying money involves various strategies aimed at growing your wealth over time. Here are some common methods for multiplying money. Investing in stocks. Investing in the stock market can provide significant returns over the long term. By purchasing shares of publicly traded companies, you can benefit from capital appreciation and dividends. It's essential to research companies thoroughly and diversify your investments to manage risk. Bonds and fixed income investments. Bonds are debt securities issued by governments or corporations, offering regular interest payments and return of principal at maturity. They are generally considered safer than stocks, but offer lower returns. Fixed income investments such as bonds can provide steady income and help diversify your investment portfolio. Real estate investing. Investing in real estate can be a lucrative way to multiply money. You can generate rental income from residential or commercial properties and benefit from property appreciation over time. Real estate investment trusts, REITs, offer another option for investing in real estate without directly owning properties. Mutual funds and exchange-traded funds, ETFs. Mutual funds and ETFs pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other assets. These investment vehicles offer professional management and diversification, making them suitable for investors seeking exposure to various markets with lower risk. Starting or investing in a business. Entrepreneurship presents opportunities to multiply money by starting or investing in a business. Successful businesses can generate significant returns on investment through sales, profits, and potential exits such as acquisitions or initial public offerings, IPOs. However, entrepreneurship also involves risks and requires careful planning and execution. Peer-to-peer lending. Peer-to-peer lending platforms allow individuals to lend money to borrowers in exchange for interest payments. By participating in peer-to-peer lending, investors can earn passive income while diversifying their investment portfolios. However, it's essential to assess the creditworthiness of borrowers and understand the risks involved. Alternative investments. Alternative investments such as commodities, hedge funds, private equity, and venture capital offer opportunities to multiply money outside traditional asset classes. These investments often come with higher risk and may require specialized knowledge or access to accredited investment opportunities. Dividend reinvestment plans. DRIPs allow investors to reinvest dividends received from stocks into additional shares of the same company, thereby compounding their investment over time. This strategy can accelerate wealth accumulation by leveraging the power of compounding. When multiplying money, it's crucial to consider factors such as risk tolerance, investment time horizon, and diversification. A well-balanced investment portfolio tailored to your financial goals and circumstances can help you achieve long-term wealth growth. It's also essential to regularly review and adjust your investment strategy based on changes in market conditions and personal financial objectives. Managing money quietly involves handling your finances in a discreet and responsible manner, focusing on long-term financial stability rather than flashy displays of wealth. Here are some key principles for managing money quietly. Budgeting. Create a budget to track your income and expenses. Allocate your money wisely, prioritizing essentials such as housing, food, utilities, and savings. Limit discretionary spending on non-essential items and entertainment, focusing on what truly adds value to your life. Saving an emergency fund. Build an emergency fund to cover unexpected expenses such as medical bills, car repairs, or job loss. Aim to save at least 3 to 6 months' worth of living expenses in a liquid, accessible account. Set up automatic transfers to your savings account to make saving a consistent habit. Living below your means. Practice frugality by living below your means. Avoid unnecessary debt and extravagant purchases. Choose modest housing, transportation, and lifestyle options that align with your financial goals. Embrace minimalism and prioritize experiences over material possessions. Debt management. If you have debt, develop a plan to pay it off systematically. Prioritize high-interest debts such as credit cards and personal loans. Consider debt consolidation or refinancing options to lower your interest rates and simplify your debt repayment process. Investing for the future. Invest for the long term to grow your wealth quietly. Diversify your investment portfolio across different asset classes such as stocks, bonds, real estate, and alternative investments. Focus on low-cost, passive investment strategies such as index funds or exchange-traded funds, ETFs, to minimize fees and maximize returns. Risk management. Protect your assets and financial well-being with appropriate insurance coverage. Consider insurance policies such as health insurance, life insurance, disability insurance, and property insurance to mitigate risks and safeguard against unexpected events. Estate planning. Plan for the future by creating a will, establishing trusts, and designating beneficiaries for your assets. Review and update your estate plan regularly to reflect changes in your life circumstances, such as marriage, divorce, birth of children, or changes in financial goals. Continued learning and financial literacy. Invest in your financial education and literacy to make informed decisions about money management and investment strategies. Stay informed about personal finance topics such as budgeting, investing, taxes, and retirement planning through books, articles, podcasts, and online resources. By managing your money quietly, you can build financial security and independence over time without drawing unnecessary attention or succumbing to societal pressure to overspend or flaunt wealth. Focus on making prudent financial decisions that align with your values, priorities, and long-term goals. Overall, money wisdom. Make, multiple, and manage your money quietly promotes a balanced and thoughtful approach to personal finance that prioritizes long-term wealth building and financial stability over conspicuous consumption.